Hi, how's everybody doing today? This is Rich here on behalf of Rich TV Live with our very special guest. It is the CEO of Delta 9 Cannabis, John Arbuthnot. How you doing today, John?
Well, Rich, thank you for having me.
Oh, thank you for being here. Excited to have you on the show today. It's been a while, and we're excited to talk about the big breaking news, a record quarter for Delta 9 Cannabis in Q2. Congratulations.
Thank you. Yeah, no, another strong quarter for the company, and happy to kind of run through, highlight some of the hits and misses throughout the quarter.
Yeah, so let's get started with that. Why the record quarter? What was different this quarter? Obviously, you've had successful quarters, quarter after quarter, and due to the global pandemic, a lot of people are having the opposite. They're having terrible quarters. You guys had a record quarter and another positive EBITDA quarter. So why? Why do you think you guys have been able to get through this tough time?
Yeah, so top line revenue for the quarter, 13 million. That was up, as you said, 46% from the previous year, up 11% from just the first quarter this year at 11.7 million. So, strong not only year over year, but quarter over quarter growth. I think when we look at the revenue segmentation, we really see what was driving that. A large portion of it was our retail division, 8.2 million just from retail this quarter. That was up from 5.6 million in the first quarter this year. So very strong quarter over quarter growth in retail. I think a few contributing factors to that. I mean, we did open 2 stores within the quarter, but that came very late in the second quarter. So very much of this is same store sales growth, which is obviously what we would like to see as a retailer. Our B2B business remains strong through the quarter, even in spite of COVID. At just over 3 million in top line revenue from B2B, and that's sales of our proprietary grow pods, consulting and licensing services, etc. Weakness for us in the quarter was wholesale at 1.4 million. That was down from almost 3 million in the previous quarter. I think a lot of that, I'll call it self-imposed bottlenecks due to COVID, having to implement physical distancing, things like that in our facilities. We were limited on how much product we could bring from the bulk package through to the consumer package setting. So a little bit of a bottleneck for us internally in the quarter and bringing product through the market. We got a Health Canada approval, notably in the quarter, for a new fully purpose-built processing center. So that's freed up the bottlenecks for us. We expect wholesale to rebound materially into the third quarter here and really sets us up to be distributing large volumes of product in line with our production capacity into the back part of the year. But, I think for the most part, as you said, through COVID to be, demonstrating another quarter of profitability, another quarter of revenue growth, obviously strong in the context of today's market.
Absolutely. I'm really, really proud of you guys. There's very few companies in Canada that can say that. And it's been interesting in 2020 because we haven't seen the huge explosion in Canada that we've seen in the United States with cannabis producers and MSOs. We've seen huge explosion with Trulieve, Curaleaf, Innovative Industrial Properties, Planet 13, Grow Generation Corp. Like some of the companies in America have really taken that next step. And for whatever reason, we haven't seen that yet in Canada. But despite that, you guys continue to persevere and you continue to move in the right direction. And in fact, you expanded your wholesale business into Ontario and Newfoundland. Can you speak on that a little bit?
Yeah, absolutely. So, 2, I'll say, material supply agreements that we signed during the quarter. We were previously licensed in all of the Western provinces, so Manitoba, Saskatchewan, Alberta, British Columbia. Obviously, we're looking to bring on new expansion markets as we can to kind of continue to drive that growth in our wholesale business now that those bottlenecks that I mentioned are addressed. So firstly was the province of Newfoundland. It's a fairly restrictive market. They don't have a whole or a huge number of suppliers or manufacturers participating in the market. We actually signed a strategic agreement. We took a 5% equity stake in a local producer there. We're helping them build out their facility. Local retailer as well. They are building out a number of stores in the market there. and signed a supply agreement with the government of Newfoundland. So that gives us entry into that Atlantic market. Again, more of a strategic positioning. But obviously, the big deal here, I think, is the Ontario supply agreement. So Ontario, the fastest growing market, obviously Canada's largest province by population. I think having access to the Ontario retail network as it expands aggressively. Ontario actually announcing this morning that they will be doubling the number of retail stores they will be approving on a monthly basis. So going from 20 stores a month to 40 stores a month. That growth alone, I think, will be very beneficial for the entire Canadian cannabis sector and for ourselves. But, I think speaking to your first point, we've seen a lot of the US MSOs, I think, really focusing on operations, producing strong quarter over quarter growth, throwing that to the bottom line, demonstrating that there's a profitable business model in these vertically integrated MSOs. I think we're looking to do likewise here in Canada. By really demonstrating that there's a profitable business model even on the Canadian side of the border. So it really trying to differentiate the firm by demonstrating that the execution is there and that cannabis is a profitable business here in Canada.
That's great. Now, you also lowered your production costs by installing an automated bottling center that can handle 25,000 kgs a year. Tell us a little bit about that.
Yeah, so I spoke a little bit about that new Health Canada approval was freeing up an internal bottleneck for us through COVID. And beyond that, obviously has strategic value over the long term. We've been investing heavily in automation of a number of different functions on production and processing over the last few years, and it's really allowed us to drive production costs down and total product costs down. I believe in this quarter we were at about 96 cents a gram. And just over $1 a gram when we talk, full cash cost per gram. So, that's really positioned us as a low cost supplier in the market. This approval is for a fully automated bottling facility. So it's not only allowed us to space out employees working in those areas and get back to full efficiency, it's fully automating the packaging, the labeling, the induction sealing, the tax stamping, the case packing, all of those activities now fully automated. So there's obvious efficiencies to be gained from that. Huge capacity, as you noted, 25,000 kilos per year capacity. Now we're only producing about 8,500 kilos a year internally. So this now allows us to be bringing on product from our craft partners, from our micro cultivation partners, from other facilities, really building the overall distribution picture through these supply agreements that we're signing with provinces and using this new purpose-built bottling facility to be really driving the efficiency there. So I think, again, number of positive takeaways for our wholesale business into the back part of the year as we look at some of these key approvals and agreements to really drive growth in that segment.
Now, you also opened up 2 new stores, congratulations, in Alberta, one in Calgary and another one in Grand Prairie. Can you tell us a little bit about these 2 stores?
Yeah, so our first steps outside of Manitoba on the retail side, we were operating 4 cannabis retail stores in the province of Manitoba. Again, all of those stores were able to stay open through the pandemic, but we also closed on the acquisition of 2 stores in the province of Alberta. So those stores came online in June, again, not contributing a whole lot of revenue in the quarter as they were open late in the quarter, but we now have our first step. Our beachhead into the Alberta market. We will continue to look for further expansion in Alberta, in Saskatchewan, kind of across the Canadian prairies on the retail side. But I think important first steps for us into that Alberta market. From here, we have another store opening planned in Manitoba. It'll be next Tuesday, actually, on September 8th. So that will continue to drive growth in our home market here in Manitoba. Further to that, we're building out a number of retail stores into the back part of the year, again, here in our home province in Manitoba, and as well looking to grow through organic store growth or store openings and retail acquisitions across Western Canada. So I think, investors should look for retail to be a point of activity and growth for us into the back part of the year.
I love what you're doing there. I've been following Trulieve, and one of the things that they've done very well is they opened up like over 50 dispensaries. And I follow them on Twitter, and it's like every time they open up another dispensary, that's just money in their pocket. And it's like they're always just opening up. And I mean, we've seen their stock really explode. So you're definitely following in the right footsteps. So Congratulations on all your growth and all your success. It's pretty unbelievable, considering there's so many companies that are going in the other direction, that are struggling, that are having write-downs, that are losing money quarter after quarter after quarter. You guys are moving in the right direction as one of the few profitable EBITDA stories in Canada right now in the cannabis space. So congratulations on that. Now, I noticed you also partnered with the Manitoba Hotel Associating to partner with various hotels to sell cannabis products. What's that all about?
So Manitoba is a unique market for retail in that, it's not only an open market, it allows for privatized retail. It also allows for certain classes of licenses that are kind of outside of the normal scope of what you would see for cannabis sales. So we have what's called an age-restricted license. That's the same as you would see in cannabis stores kind of across the country. These are dedicated bricks and mortar cannabis stores. People who are under the age of 19 in Manitoba cannot enter these stores. They cannot purchase cannabis products. We also have what's called a controlled access license. So it's a unique class of license. It basically allows for businesses that are non-cannabis oriented to be licensed to sell cannabis products and keep essentially the products under lock and key, very similar to how you would see tobacco sales in many markets across Canada. So, it's a unique licensing format. It allows us to expand our retail reach significantly by partnering with different organizations like the Manitoba Hotel Association, like their partner hotels, putting cannabis sales into hotels, into liquor vendors, into gas stations, convenience stores. I mean, really, our goal is to make cannabis, Delta-9 cannabis, as available as possible to every consumer in Manitoba. So I think these types of strategic alignments will be important for us to continue to expand our market share in Manitoba, which, when we look at the federal revenue numbers, retail revenue numbers for cannabis for Manitoba, over the last few months, we have been between 30 and 40% market share in the Manitoba market. So very significant market share here. I think we need to continue to push as the preeminent cannabis brand in our home markets, and obviously, again, look to expand that across the Canadian prairies where, to your previous point, these companies like Trulieve, these MSOs, they've been very successful in vertically integrating throughout the value chain. They're producing products, they're driving that through to retail in their own retail chains. And it's been a proven and successful model south of the border. So we really look to that and look to bring that now into the Canadian marketplace where I think that MSO type model can be quite successful.
Yeah, it's had great success in America, and I love the fact that you're bringing that model here to Canada and following in the footsteps of other success stories. I think it's brilliant. Now, we've got some questions from the audience. Do you guys plan on expanding into America? I know we've asked this in the past. You guys are pretty much coast to coast now across Canada with your expansion. Is there a focus now into our friends down south?
So as a TSX main board listed company, obviously we're restricted from actually owning assets in the United States, any plant touching activities in the United States. So we do have to be careful in terms of how we approach the US market. But obviously it's growing very quickly, particularly some of the state markets that have recently legalized either for medical or recreational purposes. A lot of growth coming out of our neighbor to the south. So it obviously needs to form a part of the strategic plan. Really, the focus for us in expansion into the U.S. has been in our grow pod segment. So our grow pods, again, specialized in proprietary cultivation equipment. We help build out facilities with this grow pod technology, kind of give people a turnkey production platform and platform to be building out their cannabis facilities and seeing similar quality and success that we've seen in our operations here in Canada. We've started to push that offering into the United States. So we can't touch the plant in the US, but we can sell cultivation equipment. We can sell our proprietary grow pods. So a lot of our focus in expanding that B2B unit this year was going to be into the United States. Now, COVID has thrown a little bit of a wrench into that. Obviously, things like trade shows and conferences and some of the marketing platforms that we would have to drive this unit into the US have all been shuttered or gone digital through COVID. But we have made multiple deliveries into the US this calendar year, into the state of Maine, into the state of Michigan. and some of these growth markets. And, I think will continue to be a focus for us. We're now in the process of hiring a dedicated sales force for the United States for our Grow Pod units. So, even in the absence of any federal legalization in the US, we will certainly see exposure to that US market and that growth opportunity through our infrastructure unit. But, of course, now the election coming up this fall is kind of throwing the potential for cannabis legalization into the forefront. I can certainly tell investors that we will be ready to take this business model that's been successful here in Canada and duplicate that into the United States market when it becomes federally legal.
Wow, that would be big. That would be huge. I mean, it seems as though it's going to get legalized. With all the pressure happening in politics, you think that is going to be one of the trump cards that could be used. So what do you think that could do for the market if they do legalize cannabis? Do you think that would create a massive surge in the sector? I mean, we haven't really seen it in Canada yet. I think we might be due. What do you think about that? Or do you think that it's already all baked in?
No, I don't think the U.S. opportunity is baked into either Canadian or U.S. company stock prices right now. We do see the U.S. companies, typically trading at a little bit more of a discount. They are CSE listed. Obviously, a number of investors then, limited on how they can invest in CSE listed companies, particularly institutions, things like that. I think U.S. legalization would really act as that next material catalyst to really be driving tailwinds for the entire sector. Obviously it's been a rocky road in the cannabis space for the last, call it 18 months for a number of investors. I think this latest earnings season should give people some indication that some of the headwinds are starting to let up. You pointed to write-downs, to impairment, things like that. And yet this earnings season, I think, was probably the best that we've seen in the last 2 or 3 earnings seasons for a number of companies. So, it looks like a lot of those material write-downs, may have already occurred. We're starting to see actually a number of companies, Aurora, Afria, Canopy even beating on a top line revenue basis versus analyst expectations. So, it did feel that this was the first earnings season where some of those headwinds have started to dissipate. I think much of the sector has found, call it bottom, is now starting to see growth. And I think, investor expectations now are on revenue growth and profits in the Canadian space. And I think, more and more we're seeing companies are starting to focus on that. I think the next few earnings seasons will be very important in continuing to demonstrate again that not only Delta 9, but the Canadian space as a whole is capable of producing profits. But, an event like the US announcing federal legalization, where now companies such as ourselves get to formalize our expansion plans into the United States, where, we as TSX listed companies, as, main exchange listed companies have access to huge pools of capital. I think that becomes very important in terms of how we as Canadian firms will be able to enter the US market and really drawing on significant investor interest in capital for that expansion. So, I think the US market, we certainly can't overstate, how much of an opportunity that will represent for our collective industry whenever that happens, whether it's later this year or 3, 5, 10 years in the future. We'll certainly be ready to make that leap when it happens.
Now, you guys are listed on the Toronto Stock Exchange. Have you ever considered, and this is a question from one of our members, have you ever considered getting listed on a senior exchange in America, like on the NASDAQ or the New York Stock Exchange?
So it's something we're looking at. Certainly considering a NASDAQ listing, I think would be our preference versus the New York.
Wow.
Certain criteria that you need to meet in order to be listed on the NASDAQ. Share price needs to be at a certain level. I believe liquidity has to be at a certain level. We have checked the boxes as we have on the TSX for revenue, kind of sustainability of the business, all of those components. You need to hire certain US-based market makers and things like that to really be assisting with that. So, it's certainly in the lens for us. Really the TSX, we see, I think, 90% plus of our trading volume occurring in Canada. So, I mean, the uplisting to the senior Canadian exchange was obviously the first order of business for us. But longer term, a main board US listing will be in the future cards for us. Certainly something we'll be exploring once the share price, the liquidity, et cetera, is kind of meriting that expansion. But we certainly see ourselves on a senior US exchange in the future.
How many retail stores do you currently have right now, and how many are you planning on opening up in the future?
Yeah, so 6 stores operating as of today. As of this time next week, we will be at 7. Again, into the back part of the year, a few organic store builds in our home market here in Manitoba, and look to see announcements on future expansion into Saskatchewan and Alberta through acquisition or again, announcing organic store builds into the back part of the year. But we have been generally guiding investors that, we feel that we can have 12 stores up and operating here in our home province, as well as our 2 in Alberta by the end of next year. And beyond that, anticipate another 5 or 6 store openings at the very least through the end of next year in these other markets as well. So again, certainly a lot of upcoming activity on the retail side for us.
So upwards of 20 stores in the next year or so, year and a half.
We should be approaching 20 stores, I would think, by the end of next year or slightly into the year following.
Wow, that's great. You've got 6 locations right now. You'll have 7 by next week, and to be able to grow by another 200% in the next year and a half, that's pretty substantial growth. And that is the same model I've seen Trulieve use. So I like that model, and clearly what you're doing is working. Now, we have a question here. Seems that you're always beating your estimates, you're always profitable, but the share price hasn't really reflected that. Is there any reason for shareholders that are watching? Is there anything you can say to them that are kind of maybe sitting there wondering, why Delta 9 hasn't moved like Trulieve, or why Delta 9 hasn't moved like Planet 13? When you compare yourself to your peers, you seem to be very undervalued, underappreciated, underexposed. And I believe that, and I know you believe that. What do you say to the investors that believe that?
The Canadian space, I think obviously there's been a lot of, call it hype, or a lot of the resurgence has happened in the US, where again, you've seen kind of across the board some of the larger players producing positive results. So that has driven, again, some tailwinds for the US sector. We've seen more share gains in the US space and the US names versus the Canadian space. I think if you look back at the last year, through the sell-off in the Canadian space, we kind of trended with the market, down 65 to 70% with the rest of the market. But actually, if you look at this year on a calendar basis, I was looking at a report from BMO last week. We are actually in the top 5 names in terms of share performance on a year-to-date basis for Canadian licensed producers.
Very good.
So, I think the share performance versus our peer group has actually been quite positive through this calendar year. Now, that's still not, showing in a huge breakout in the share price to a level where I think it should be. At the same time, again, I think, and I feel quite strongly over the next few earnings seasons, as this reset kind of hits full swing in the Canadian space, the names that will really see a lift are the names that are focused on execution and that are delivering on their financials. It's no longer sufficient for a cannabis company to say that they're going to do all of these things and not be producing real results. So, that focus will be there. I think, as the business builds critical mass, as of our latest quarter, we're doing annualized revenue in excess of $50 million a year. We did 32 million all of last year. So that's, significant growth that we're seeing already as we get through calendar 2020. Again, continue to demonstrate that top line is strong, that the growth over the previous year is strong. I think for us, it's about pushing through to that critical mass. You reach 100 million, 150 million in annualized revenue, and you do it profitably. That starts to draw institutional investor interest. That starts to become a story that's quite compelling. And if the company only continued to trade at 1 times revenue, we will see a significant lift from current levels, let alone a breakout to where our peer group is at between 3 and 4 times annualized revenue. So, I think it's about continuing to build credibility, with capital markets and demonstrating again that the business model is sound. And ultimately that becomes reflected in the share price at some point.
Well, we're really, really impressed to see your growth. And it just seems like every time we get you on the show, the news just gets better and you guys just continue to produce and you guys continue to move in the right direction. If there was anything you wanted to leave with shareholders, what would it be?
I think a lot to look forward to over the back part of the year. We plan to launch our first 2.0 products, our vape line, our line of Keef product that we call Sapphire. Will launch into September here. So 2.0 product launches, additional store openings, additional earnings into the third, fourth quarter, which again, we continue to feel will be strong given the way the business has operated through COVID. I think there's a lot to look forward to in terms of company catalysts that will continue to drive growth into the future. So I think for investors who have had an eye on the story, good things are coming. In terms of the company continuing to produce on the promises that we put forward for growth for the company. So again, things looking good for Delta 9 into the future.
Well, really excited to see you guys evolve. And I'm really excited about this story. It's been nice to see the US companies start to make moves. It's been a long time coming. For both Canada and the United States, I think. And I think the Canadian side needs to start catching up too. So I think if you're looking for a Canadian cannabis story, I think you start with Delta 9 Cannabis. It's undervalued, it's underappreciated, it's underexposed, in my opinion. And I think the upside is tremendous. And congratulations on all your success, John. And hopefully we can have you again here soon with another successful quarter or with any other big breaking news that you have. Love to invite you on the show again here soon so we can talk about your progress as it happens.
Rich, thank you as always for having me.
Thank you so much. We are here with the CEO, John Arbuthnot of Delta 9 Cannabis, a record Q2 in growth and revenue and EBITDA. Congratulations on all your success. Thank you guys for watching. Have yourselves a great day.